as with every show, I like to always, I guess, break down what I think individual investors should consider before they make their investment decisions. And we always break them down into three topics. First topic, all eyes on Nvidia. Again, Nvidia showing up, another name and another thing to discuss. U.S. government yields rising. We've seen government yields rising in 2024. The 2-year now around 4.7%, approaching 5%, getting a little bit high again. The 10-year in that 430 range. It actually hit 440 recently, on its way up to 4.5% perhaps. So again, market doesn't really like that too much, and we'll discuss. And the third point I wanted to discuss today is something we discuss on a regular basis, which are stock valuations or individual investment ideas, valuations on those ideas. And I know a lot of people have been getting carried away with technology over the past year or so, but there are a lot of good quality companies that have been doing well that still have good valuations. So let's get to the first topic, all eyes on Nvidia. And I bring up Nvidia because, like Apple once was the key to this market, Nvidia is now, in my opinion, the key to this market. We used to say the S&P 500 or the stock market in general could not move higher unless Apple moved higher. Apple, once upon a time, was by far the largest company in the world. You're going to see in a couple of minutes how Apple is no longer the largest company in the world. Now, Microsoft is, and Nvidia actually is right behind Apple, third place now. Nvidia is the key to artificial intelligence. When you think about artificial intelligence, you think of chip makers, you think of Nvidia, AMD, Broadcom. And as we know, Nvidia now has most of the market share in the AI space. They just had a conference where they introduced new chips, more powerful chips. They also talked about their relationships with Amazon, IBM, Oracle, Meta. The list goes on, Azure, Microsoft. And we heard from the CEO, his keynote speech, talked about how the technology is just getting more powerful and faster, and how computers are able to now think more for themselves. And I'm sure most of you watching today have probably gone into ChatGPT and asked for certain things, and I'm sure the computer, or the program was able to produce what you were asking. So Nvidia, it's as I said, it's very important when it comes to artificial intelligence. We know the chip makers are pretty dominating when it comes to technology in the tech sector. And we know the tech sector makes up about 40% or maybe even a little bit more of the S&P 500. So if as goes tech, or as goes Nvidia, goes the tech sector, goes other chip makers, therefore how the tech sector will perform. And as the tech sector performs, goes the rest of the S&P 500. So Nvidia is very, very important. And I have a few charts on Nvidia talking about market cap as I discussed, the size of Nvidia. First chart here, market cap history of Nvidia from 2001 to 2024. You could see how much the size of Nvidia has grown on the far right-hand side. It was flatlining, worth not even 100 billion, not that long ago. We're talking 10 years ago. And all of a sudden, 2020 hit, the stock climbed, or the company climbed well over 500 billion, almost $1 trillion in market cap, pulled back from that, and then surged once again. And now you're looking at Nvidia somewhere around 2.2, 2.3 trillion in market cap, behind only Apple and Microsoft as the third largest company in the world. We have a chart on Nvidia, actually a chart on Nvidia and its competitors. You can see where it sits, not only its competitors, but similar companies. So you see here other chip makers. You see Microsoft being slightly larger, AMD, Texas Instruments, Qualcomm. You could see, you probably could add up all those companies and they still wouldn't equal the size of Nvidia at this time. And I thought for, I guess, interest sake, for those that are wondering, well, what are the biggest companies in the world? What are the 10 largest companies in the world? Well, we have them here on our next chart. You can see Microsoft is the largest, followed by Apple, and there is Nvidia. Saudi Arabian Oil would be the fourth. Amazon, Alphabet, Meta, Berkshire Hathaway, which is Warren Buffett's company. Eli Lilly, very interesting, a pharmaceutical company in the top 10 in terms of size. Unbelievable. Something we have not seen before ever in I believe. We have not seen a pharma company of that size. And that is on the back of, obviously, the weight loss drugs that Eli Lilly has to offer the general population. And lastly, Taiwan Semiconductor. This is a chip maker. Again, they build the chips. Nvidia designs them. Taiwan Semi builds them. So obviously they work together, and Taiwan Semiconductor will work hand in hand with other chip makers as well. So I think the key to this market will continue to be Nvidia until something changes. And as an investor today, I think you need to be mindful of that. I'm not saying you need to go out and buy Nvidia stock today. That's not what I want to say. What I do think you need to do is just keep an eye on it, see how it's trading, hear about what's going on in artificial intelligence, what's going on in the semiconductor space, the chip makers in the United States, because I think, at least for now, they continue to lead this market. The second point I think individual investors should focus on, as I mentioned, are U.S. government yields. And as I said right off the top, government yields have been rising in the U.S. The 2-year is now getting close to 5% again. The 10-year getting close to 4.5%. Not something the market likes, because stock market does not want to compete with bonds, government bonds, low-risk bonds that are paying such a high yield, because people will take their money out of the stock market and move it into the safety of these high-grade, investment-grade bonds like government bonds. So whenever we see yields get too high, never a good thing, especially for interest-sensitive sectors like real estate or technology. Never good for those sectors. So we want to keep an eye on these yields. These yields have been moving higher because it is anticipated at 2 p.m. today that we're going to hear from the Federal Reserve, and they're going to tell us that, well, they may not cut rates as much as we thought, maybe now only as much as, or as many as 2 times, as opposed to originally they said they were cutting 3 times. So I think a lot of people are waiting to see what the Fed says, if they're going to change their outlook for cuts to only be twice this year versus 3 times, and that could move markets this afternoon. We have a chart on the U.S. 10-year Treasury showing you how it's gone up since 2024, since the calendar changed to 2024. Yeah, when we took this, picture, it was 4.3%, slightly below that now. The 2-year Treasury, we have a picture or a chart of that as well, 4.692 or 4.7 roughly percent. And again, that has come down just slightly in the last day or so, but I think all eyes will be on the Fed at 2 p.m. this afternoon. And I think you will see a lot of movement in these yields with the announcement, not necessarily of whether they're going to raise rates or not, because we know they're not going to raise rates. We also know they're not going to cut rates, but whether they're still looking to cut rates 3 times this year or twice. The last chart we have for this, which I think is very important, shows us an inverted yield curve. We always talk about the 2-year and the 10-year. Well, normally, in normal times, the yield on a 10-year bond would be higher than the yield on a 2-year, right? A 2-year GIC wouldn't pay you as much as, let's say, a 5-year GIC. To hold money longer, the bank, or in this case, the government, would need to pay you higher interest. Well, that's not what's been happening for the past year or two. We've seen the 2-year yields a lot higher than the 10-year. And you can see now by this picture that the yields are inverted. How much are they inverted? Well, it looks like 0.4%, 0.39% inverted. And that has been changing. It's been getting narrow. Now, it most recently has started to widen. Again, you could see down, I guess, in the summertime, that discrepancy was obviously a little greater. But overall, it's something to keep an eye on. Yields, government bonds. This is very important for the stock market and for investors to keep an eye on before they make their investment decisions. The third topic and last topic I wanted to touch on are stock valuations. And again, it's something I always talk about with investors. You know, they'll come to me and they'll recommend, or they'll ask me, Alan, what do you think about this stock? And I pull it up. If I don't know it, take a look at it, and we'll see where it's trading. We'll see how it's doing. We'll see what its earnings per share versus its growth rate is depending on what industry that stock is in. We can also look at cash flow. We can look at many different things to evaluate a company. So valuations are important always, but I think even more so when the stock market is at all-time highs, when the indices are at all-time highs, S&P 500, Dow Jones, NASDAQ, even the TSX has been rallying very strongly over the past little while. So you always want to look at valuations. And again, as per our first topic about not investing when valuations or when the markets are high, as I said at that time, just earlier, there are many companies that actually have gone higher, but still represent good value. And those are the ones you want to find. A couple of names I wanted to bring to you today. First one is one we all know, CIBC Bank. CIBC has had a great run. You can see it here on the far right-hand side, still paying about a 5.3% dividend yield. Stock is getting back to highs we haven't seen in a little while. Actually, back at 52-week highs, not all-time highs, but 52-week highs. And it's a name that I think is good for both growth and income. CIBC, I have some PEs written down here, so I don't want to make a mistake, but CIBC trading at around 10 times forward earnings. Give you another example of a name trading at around 10 times forward earnings in the US would be Citibank. We don't have a chart on that, but names like Citibank, Bank of America, CIBC, Bank of Nova Scotia, these are names that I think are still trading relatively cheaply at this point in time, and names that you could own for growth, in this case, also for income. Another chart we have here on a stock that I've talked about many times on this show, and that is Alphabet. And I bring up Alphabet because it's a tech name, and many people would think, well, it's very expensive right now, and I wouldn't touch that stock at this point in time. It's technology, and technology has gone through the roof, and I'm just not interested. Well, Google or Alphabet hasn't really gone through the roof in terms of valuations. Right now, Google is trading at around 21 times earnings. Compare that to a Microsoft or another big cap tech name, 35 times earnings. Compare that to a name like Amazon. I think it's closer to 40 times earnings. Apple trading at just under 30 times earnings. Meta, which would be another name I think is fairly cheap. We don't have a chart on that. But Meta is also trading at around, let's call it 20 times forward earnings. So again, other names that have done really well, like Meta, like Alphabet, but still represent good valuation. Another name, here we have an industrial, Caterpillar. And this stock is another name that I feel is trading very cheaply. This name, United Rentals, which does the same thing. Basically, United Rentals rents out heavy machinery. Caterpillar sells and rents. Caterpillar is more international. United Rentals is more North American. But both names have done extremely well. Here's a chart of Caterpillar, trading at around 16 times only, trading at all-time highs, in and around 350, 360 a share. Another name that I think, based on stock valuation, has done extremely well, but probably can still move higher. And lastly, I have a chart here on a pharmaceutical name we all know, maker of Viagra once upon a time, or still maker of Viagra, I guess, Pfizer. And Pfizer obviously was a big name during COVID with their COVID vaccine. And as you can see, since we've come through the pandemic on the other side and everybody is back to, I would say, pretty much a normal life, getting back out there, going to work, going to your office, going shopping, out in stores again. Pfizer has been in tough. They haven't made as much money from their COVID vaccines, and so they've had to do other things. Recently, they made an acquisition in the oncology area, so now getting more into the cancer research. And Pfizer, in my opinion, promises to be a name that I think should do well going forward. And Pfizer right now paying over a 6% dividend. And even though the stock or the chart is showing us Pfizer hasn't done too well, I would like to look at this name because it is trading very cheaply. Pfizer is trading today at around 12 times earnings. And another name in the space, Bristol Myers, trading at around 8 times earnings. So a couple of pharmaceutical companies that I think have good promise both of them making acquisitions in the oncology space and names that I think you could get behind in terms of valuation. So stock valuation, something individual investors should consider before you make your investment choices. You always want to look to see, are stocks trading at a premium, how they're doing in relation to their competitors, to their peers, and combining that with looking at and keeping an eye on yields, government yields in the US, and Nvidia, which is the market mover, the big market mover of today. Those are the three things that I think you need to be mindful of before you make your investment decisions over the next couple of weeks.